Welcome everyone back to Pete's Investing Updates. We review the weekly progress of a sample of blue chip stocks across Australia, the US and Europe. And this week's summary, we look again at BHP, which showed a major drop in its share price last week, and Telefonica, which has a decline over several years, but slowly recovering, breaking above the moving average 100 and back on track towards profitability. If you want me to review a share price, put it in the comments and I'll cover it in a future video. As always, click on the subscribe button, the notification bell, and like the video to support the channel. Let's first review the channel playlist, and this is where we review and post our share price updates and where this video will go. The indexes we look at each week as well, and some strategies that we follow. Please look at that playlist especially to understand our trading strategy in detail. And this is our strategy playlist. I've got some simple trading strategies shown and money management ideas and the average down approach. So again, visit that playlist to get a better understanding. Again, this is not financial advice. We're offering these videos simply as an educational series for your betterment in your trading with shares and other instruments. A few things to consider. We track and trade on a daily chart. Since you want to back test and see results of trades back during the GFC as well as COVID effects. We look at how that will work in cases of a downturn, in major downturns, and how that affects our strategies. We track and backtest revenue over drawdown requirements, and this is shown as a percentage to optimize our returns with less exposure. Brokerage is included in our backtesting. I'll use $8 per transaction each time we buy or sell, and revenue shown may change depending on your brokerage costs. Dividends are not included in our backtesting, and that'll obviously be a bonus if you collect dividends as well during the duration of your trades. And backtesting transacts with $2,000 lots per trade. To increase revenue, that is return, simply increase this, but beware this will also increase your drawdown if the market goes against you. So ensure you factor that in with your money management strategy. And again, refer to my money management videos to get a better understanding of the strategies that we use. Okay, let's first of all go into our results table, and these are the shares we track. I'm tracking these shares every week for consistency. In other words, I don't want to cherry pick one share over the other and show you good results each week. I want to show you the same shares and how they're performing week on week, and we've been trading these in our portfolio since the start of 2021, since January. And again, if you want to go back and check some of those in history to get an understanding of some of the results that we've gained. More recently, I've included daily charts to show the effects of the COVID and GFC impacts and how that impacts our strategies. So again, the other thing I'm showing you here is the dividend yields. They each are tracked, and also the ex-dividend dates. Now, I've highlighted here, over the last few weeks, we've received, or the dividends were paid, and we've been holding those shares during those periods. So we'll be receiving those dividends in our accounts moving forward. This is our profitability to buy and sell those shares, and the drawdowns respectively for each of those. And then I've got here just a calculation on the average of number of months over that period for each of these. So it's showing about an average of a $233 return per month. Now, obviously, if you want to increase your returns, you simply increase your revenue or your amount you invest in each trade you make. So in this case, we're trading $2,000 lots. So every time we buy a lot of CBA shares, for example, we're buying $2,000 worth. If we want to buy BHP shares, we buy $2,000 worth, and so on. If you want to trade 1,000 or even 5,000 or 10,000 for each trade, go for it, but make sure you factor that in your money management strategy. Up here, it shows you the entry and exit approach we use. Again, on our trades, we enter in with CCI breaking above CCI 14 above zero. We close when the moving average 20 crosses down and it becomes a bit of a downturn. And we average down when the close is less than the entry price, obviously. We don't want to buy more when the close is greater than the entry price. When the CCI breaks above zero, and also more importantly, when the minimum gain of the last 100 bars, high-low range, has been reached. And I'll try and explain how that works in a chart coming up. So let's first of all look at BHP and how that has impacted. Again, you can see here the previous week, the price dropped off the cliff. Well, not off the cliff, but quite substantially compared to our previous trades, our previous bars. And it's stabilized this week. This is this week's trades. So let's look in okay so far. We've only got one lot of entries here. We bought 43 shares back there. and that's now trading there and is stabilized. This up here shows a profitability chart and where we sit at the moment at 37.82. And in this particular trade, it opened up at, the cursor there, 38.39. So we're down only about $30 odd from our opening position. You can see there, it's pretty much where we started from. Now, we didn't close out because we haven't reached our minimum gain. Part of our strategy says before we get out, as in this case, we would have gotten out here when the moving average 20 started turning negative. That's where it starts from blue to red, but we haven't reached our profitability at that point. So where that bar was, and this bar actually, when that bar broke and that moving average 20 broke down, we still hadn't reached our minimum profitability. Even though we were profitable, we weren't at our minimum target range. And what we say our minimum target range is for the previous 100 bars. We look at the high-low range. We say, okay, if the average high-low range was, let's say, 30 points, I'm just making that up at the moment, but let's say it was 30 points, we want to get at least a 30-point gain somewhere up here, for example, if that was 30 points. And when our moving average 20 turns down, we want to get out at that point. Now, it may have been there, but the moving average turned down there, which is lower, and we didn't exit. So hence the strategy. I'll show you an example here. So in this trade here, we opened up here, we bought 59 shares. So the price went sideways for a while, and it closed out up here at 59.7. We bought here at 59 shares at 34.07. And we closed out 59 shares at 37.40. So you can see that the profitability closed out at 35.09, where it opened up profitability at 33.28. So it made a couple $100 in returns in that little trade. And our gain was reached. So in other words, it reached beyond our last high-low range of the last 100 bars. Now, we use the last 100 bars as a measure because the other simple way of doing it is say, okay, if it's gained at least 5%. Now, let me just draw a quick ruler to show you the gain of 5%. So let's keep an eye on that little box that little box here that says 8.98%. So you can see there, it's assuming 5% was our target. Let's say it was about there. 4.99 is close enough. So in other words, if we said if an arbitrary amount was 5%, then anything above that would have been a profitable range to hit. So if the moving average 20 was above there, we would have closed out. So theoretically, if we said 5%, they would have closed, and it would have closed out there, which it did in this case. But we're using the last high-low range, the last 100 bars, and that happens to be close to 5%. That's why I'm using the 5% as an example. So again, if you want to use this as a example and put on a spreadsheet, you don't have to follow if you haven't got a fancy software tool like this one, you can put in a spreadsheet and say, right, when it's gained 5% minimum, and the moving average 20 is turning down, you can close out. Now, the price has gone up, but again, we're going to follow our strategy. You would have entered the trade again, as we did in this case. We entered another 52 shares when the CCI 14 broke above zero, and that's what this little chart here, and these spikes here indicate, just highlight the moving average, the CCI 14 breaking above zero. Okay, that's our strategy explained in a nutshell. Again, refer to our detailed videos to get a better understanding of the trading strategy. Let's quickly look at Telefonica and see how that's progressing. And I wanted to show you this in particular. You can see here over the last few months, Telefonica has been rising, but longer term, and you can see here the profitability has been in the red below our $100,000 base mark. You can see here we open up the trade initially back here. We bought our first lot of shares, another lot there. Price dropped, we bought another lot there, another lot there. So you can see here the price is dropping significantly enough before we enter the market again. These steps indicate how many shares we've bought. So here we can see here we bought $2,000 lots in each of these levels, and we've got a total of 3,817 shares in Telefonica in this particular trade. Now, the reason I'm cautious with this one is because it's still in a downtrend long term. You can see here since middle of 2015, the price has been declining. So even though we're breaking above the moving average 100 here, which is good, that's a positive. Now, we don't expect the price to go up to this level, back to where we were here. That's where we entered our first trade. We don't expect the price to go up to that level. You can see here profitability was 2174 where it opened approximately, without getting into the detail there. And we're only sitting at 449. So I've got a ways to go. We need the price to rise, the share price to rise probably in this sort of area before we can actually get some profitable close out on this particular trade. And that's the benefit of the averaging down. You don't need to go to the full extent of the recovery. You only need to make a certain rise to about that level, just eyeballing it there. And lastly, I want to talk about Caterpillar. Now this is starting to break down below the MA, or it's actually broken down below the MA 100, moving average 100, and also on a bit of a down trajectory on the moving average 20. Now we want it to break, it's sort of struggling to break above the moving average 20. It's sort of consolidating at the moment. We'd like to see that break above the moving average 100 for a more positive gain. And as you can see there, we've entered one lot of shares, 8 shares, back here in late March. And our profitability sitting at 9321, whereas the starting point was 9463. So we're down about $60 odd on that trade in particular. That's all there is at the moment for this week's report. And again, feel free to refer to the strategy playlist and determine more of how we operate and money management ideas, etc., and how to trade safely. All right, guys, thanks, and I'll speak to you in the next week's video.